All right, what is up, everybody? It's Rob coming at you with the Wednesday nightly watch list. It's been an exciting week and a big day in the markets. Okay, so let's get right into the watch list and let's hit you with the news and what is moving the markets. So, first things first, all right? Let me show you here, all right? If you look at the top here on Thinkorswim, right? The markets were a mixed bag, right? You can see the SPY was up 0.05%. QQQ, Nasdaq 0.5%, and the Dow ended down around 0.25%. So what caused the move today in the markets? As you can see, right? Big move here. Now that was the Fed meeting that happened today. So the Fed did cut rates 0.25%, or as we like to call it, 25 basis points, which was expected. But what threw the market off here, as you'll see, right, this move down was the Fed press conference. And Jerome Powell came out and said, hey, we're not going to guarantee a December cut. So he came out with a cautious tone on future cuts and kind of tempered the enthusiasm. Now, the market's still pricing in a December cut. If you look at the Fed rate cut odds, it's around 88%. So more than likely, we're still going to get our cut in December. But, as the Fed, they're supposed to be independent from the market and politics. So, they're just trying to get a little bit of respect back. And he was saying, hey guys, we're not going to be pushed around by, what the market wants. So, he was just, stepping back a little bit saying, hey, we have the power here. And, that's all that was, right? Kind of being able to open up a little bit of, movement on the Fed side. But more than likely or not, December, we will see our quarter rate cut. So that did spark some profit taking. You saw the SPY come down from 688 to 682. And, that created, right, his comment created some volatility that you could have traded. And as you see here, right, the market's moving around because it's earnings season, okay? And just a quick note for you, index options, right, like the S&P 500, ETF SPY, even Nasdaq QQQ, it does trade for 15 minutes after the market closes, okay? So just a quick note there. But, right, that's what moved the market today. Futures opened up this morning higher, hitting an all-time high, right? Intraday, as you can see here, based on, earnings that have been out and, optimism coming into this Fed meeting. So I did have a quick fact I wanted to share for you guys here, okay? Which was that option traders turn record bullish. Put the call ratios plunge to 0.5, the lowest level in over a decade. So the market is super static. It's super bullish, right? Earnings have been, doing great. You're getting Fed rate cuts, and right, you even have Trump and President Xi in China. They're going to meet tomorrow, and supposedly we're going to get a trade deal out of that, and possibly tariffs lowered. So, right. Big bullish scenario here. The market is at all-time highs and it's earnings season. So next thing I have for you here is, look, Eli Lilly, right? They came out today and said they're going to partner with Walmart. So it's called Lilly Direct, and Walmart Pharmacy are going to launch first retail pickup option with direct-to-consumer pricing for Zepbound, right? The fat shots out of Eli Lilly. So it's going to be around a 50% discount on Zepbound at Walmart, and the single dose vials are going to start at $350 per month. Okay, so if we come over here and say if we want to pull up Eli Lilly's chart, right, LLY, right, the stock ended down 1% today, and if we look at Walmart, okay, about the same. So much news didn't really come out of this, right? No big news. Novo Nordisk, right, sold off, had a big move down, okay? So nonetheless, I'm giving you this news because we do have Novo Nordisk in our long-term portfolio. Eli Lilly is a big competitor, and, right, you're seeing these companies come out and do these direct-to-consumer pricing. So there's that. It is a price war for these fat shots. And then what we do have is Trump is going to meet with President Xi tomorrow morning. Now, if I say this correctly, I think the meeting is at 11 a.m., but you can fact check me on that. So look, another big thing that could move the markets are going to get a lot of headlines coming out tomorrow. Okay, the market's going to digest these earnings that just came out, the Fed rate cut, and then tomorrow we have the Trump and President China meeting, okay? And, there's been a lot coming into this, right? A lot of rhetoric, a lot of people moving parts. And then, right, coming to this meeting, China purchased its first cargo of U.S. soybeans this season. So, China stopped buying U.S. soybeans and also stopped exporting critical minerals to the United States. And, that caused, a lot of heated arguments between Trump and China. So, right, they have been setting the stage, and we have that meeting tomorrow. And then this morning, NVIDIA, right, it's set to become the world's first 5 trillion public company, right? What should happen today? If we do look at a chart of NVIDIA today, you will see that, right, it went up this morning. It was going crazy. Okay, ran all the way up to $212. Okay, the stock opened 208, ran up to 212. So it was over $5 trillion, the first public company traded on the markets to ever do so. Okay, now this did continue its run off of yesterday. NVIDIA did have a big conference, and right, their CEO did come out and say, hey, we're actually expecting $500 billion more dollars, right, in our earnings. So that sent the stock up. And at the same time, you did get a little rumor coming out that Trump says that he may discuss NVIDIA's Blackwell chip with President Xi. So you pair this rumor, which is really important because right now NVIDIA is not allowed and they do not sell any chips to China. So if that is negotiated and that market opens up, well, that's going to increase NVIDIA's revenue and just more money for them, and that could even send the stock higher, which is even incredible to say. AI bubble, NVIDIA is the focus of everything. And, right, watch this tomorrow, right, coming out of the Trump meeting. So, also, like I was telling you, right, with this meeting today, the Federal Reserve Powell, he came out and said another cut in December is far from assured. So, if we go and look at the SPY chart, right here, okay, this is when that headline came out, okay, dropped the market, and then you started to get it move down, right, because traders and investors are like, whoa, you're saying we're not going to get our cut? It freaked the market out, right? You got a little risk event, okay, but like I'm telling everyone, don't take that too seriously, okay? That's just the Federal Reserve and Jerome Powell opening up their optionality, just in case they have black swan, something crazy happened. Well, they don't pigeon themselves in a hole here, okay, from what they say. So they really always try to stay pretty open so that way they can have some movement. And on top of that, right, guys, this is probably going to be one of the last times that we actually see Federal Reserve Chairman Jerome Powell take the stand for an FOC meeting right after December, because President Trump is going to replace him. Trump does not like Powell for many reasons, but one of the big things that I've been telling people is, well, Powell did do a 50 basis point cut coming right into the election, which, a lot of people had a big problem with that. The Fed's supposed to be independent, and then you saw the Federal Reserve cut interest rates right before the election. You could take that with a grain of salt or, take it one way politically, but, that did not go well, and now Trump and Powell do not have a great relationship, and Powell will be replaced. So he's been the chairman for over 8 years, and throughout my whole investing career here in the markets, it's been really interesting. We're always watching the Powell pressers, and it's time for a new era. So it's bittersweet, and we're gonna see who the next Federal Reserve Chairman coming into the new year is gonna be. So let's keep this ball rolling here. Earnings season, baby. So Google, they absolutely crushed their earnings, okay? Look at the revenue. All right, they came in at 102.5 versus the $100 billion estimate. They killed it on their EPS, which is the profitability metric, how much they actually earn in per share out of their revenue. And they killed it on their cloud sales, 15 billion versus 14 billion. So if we come back to the chart here, okay, GOG is the ticker symbol. Look at this, right? They went from $275 all the way up to $296. And I do have a little chart here so you can see the extended hour move. So where is our Google? Give me a minute here, it's loading. One of the things with Thinkorswim is you cannot see the extended percent move up here, which is really annoying. So I'm pulling it up for you right now so you can actually see the percentage gain. Okay, well, it doesn't want to work for me. See, Thinkorswim is a great platform, but you know what? It's really annoying. The after-hour movements, they just don't want to give it to you. So that is why I also use E-Trade platform as well, because I love their high-low ticker, which allows us to see the market movement. So here we go. This is what I have for you. Let me get this off the screen. Look here, look. After hours up 5.3% off of that earnings report. Okay, guys, it went absolutely crazy. They killed their earnings, and right, it sent the stock up big time after hours. So watch that coming into tomorrow morning. All right, the stock is trading at right now 289. Right, but if we pull this chart out, right, look, Google's been going to all-time highs, okay, and it closed today, right, 275, even killed it after hours, up to $300. So all-time high for Google. Just absolutely crazy. I mean, the company and what they're doing. Next thing I have for you here is Microsoft. They reported, okay? Now, short story short, they did miss on their cloud revenue numbers, okay? So that sent the stock down. You can look here, right? The revenue did beat, the EPS beat, okay? But, right, everyone is looking at these companies for, right, their cloud revenue. What are they doing with AI? How's the cloud going? So that's what matters for these companies. So if we take a look at Microsoft stock, okay, look, they had a huge move down, and actually, look at this. It actually started to come back up. I mean, Microsoft had this huge move down, and it started to rebound. Now, we do have the conference calls for all these companies, right? These are just the face value numbers that you're seeing, okay? But wow, look at this big move down, and it started to rebound off of that. So there is your Microsoft earnings. Next thing is Meta. So Meta, let's see what happened here. I was following their earnings that I have for you. So they absolutely, I mean, they got wrecked, okay? And look at this, stock moved all the way from 751 at close all the way down to 682. Okay, the stock sold off. Well, why is that, Rob? Well, Meta stock was down over 10% after hours, and they missed their earnings due to a $16 billion one-time expense. Okay, and now that killed their earnings for the quarter because of that big expense there. So that's what sent the stock down. Okay, read into that because it's going to be interesting earnings. Open tomorrow, right? Because they're going to digest all this news. So look into that more tomorrow. We also had Starbucks, okay? Now this was a mixed bag, but right, as you can see here, the revenue did come up a little bit higher, and they did miss on their earnings estimate. So like I say, mixed bag, revenue beat, earnings miss, and this was because the U.S. sales stagnated while China slowed down a little bit. So, if we come over to Thinkorswim and we pull up a chart for Starbucks, okay, well, let me pull this out for you. Okay, look, it went down to $78 and it did recover a bit. So this was a big earnings for the stock, right? Because a lot of people are worried about Starbucks recently. Okay, you can see here, like, if we go back to 2020, the Corona soft, look, it came all the way down to $50, had this big rebound up to 126, sold off in 2022 like most companies because of the interest rate hikes. And, I'm telling you this because it's kind of giving you a relative, timeline and price, to history, because $84, okay, well, look at this. I mean, if it comes down more, I mean, we would definitely consider adding this to the long-term portfolio here. But for now, right, we're letting this, work its magic, work its way out. But did just have earnings, mixed bag. Look, as you can see initially, right, algos and the market popped it up, came down. So that conference call is going to be big. More to come out for Starbucks. Now, another big name that we have been looking at, Chipotle, CMG. Now, one big long-term candidate that we have been looking at, right? Now, this was as I called it, inline earnings, okay? So the revenue came in at $3 billion for the quarter. Estimate was 3.03. So slight miss, but it's not really a big doozy because analysts can't get this stuff precise. So when you're that close, we call that an inline revenue. And then the EPS, right, came in at 0.29 a share versus 0.29 estimates, in line, okay? So then you got to look at their operating margin and their comparable sales, right? How are stores doing comparable, right, to the previous quarters? So, right, not much growth, comparable sales. So, stores are not really selling more. And, right, you are seeing the margins, right? You want to look at the margins per quarter, and they're coming down because there's pressure from labor and ingredient costs due to food costs going up. So that is CMG numbers. And when we actually look at the stock here after hours, look, coming down to $37.56. Now we have two really strong long-term portfolio candidates, and it's Constellation Brands, as you can see here, and Chipotle. Now, before I get into Constellation Brands, let's focus on Chipotle because I just went over their earnings numbers. But look, let's pull this chart out. Okay, from 100 days, if you want to see the low, okay, it hit $38.30. Okay, let's pull it out even more. Okay, look at this chart on Chipotle. Okay, so if we're going to invest in Chipotle, right, theoretically, we can get prices we're seeing, right, back to 2023, right? So you could, from a historical price standpoint, it's 2023 prices on Chipotle. Now, my price target for the stock, I did want to buy it under $35. Okay, so what we're seeing here, I'm going to try to pull this chart out, get you a little more so you can see more. Okay, so we did want to buy, right, at $35 because I wanted it to come down to around here, crack this level, right, and get an entry. So we're getting close to that, okay? I mean, look, this continues to sell off after hours, and I've been waiting to add to this. Right now it's at $37, and I am loving this price action. I really want this to come down to our, our price. So this is beautiful here. And then what I also have for you is Constellation Brands, right? We already had this in our portfolio, and I wanted to add to the position, but Chipotle was one of those names that could be a new add to the portfolio. But if you look here, right, with STZ, okay, let's pull this chart out. So if we go out recently, right, the most recent low was $131.20, and then you had this big move up right after its earnings up to 147. But this name has actually been coming down. And just today, okay, look, right, with the Fed meeting, okay, now the market sold off, so did this, and it hit a new 52-week low. So if you look at the 1 year, 1 day, look, the new low today was $130.75. So, right, we're coming at the low of this little range here. Now, this could actually come down some more if I pull the chart out, right? I mean, I'm going to have to take this out even further. But see, look, this is beautiful. Why are we looking at this? Because we're getting prices more at a discount than 3 years ago. So if I pull this out, let's go 5 years. Okay, look, we're going to have to do it even more. And that's exactly why it's on our long-term candidate. So look, right here. Geez, I'm going to have to pull this chart out even more. Maybe on a monthly level. Okay. So, yeah, I'm going to have to pull this out even more. So here we go. Let me get this for you. So what I'm trying to do is show you, I'm just going to do this because we need to see more. Where is it? Because I was looking at 126. Let's see. Yeah, so basically there's this range here that I was looking at on the stock, okay? From $122, okay, up to 131. So the next range that this could be, basically what I'm getting at is, right, right? This was a low during the pandemic, okay, of $104. I don't think we're going to actually see that, okay? That was panic selling. But, right, what you could see is this little range here. Okay, so if we zoom into here, right, what I wanted to show you was that the next low for this, okay, could be around $123. So I do think that if, we see this come down here to $126, look, the low of this little range here, I believe this would be a good time to add the name. So I'll put the stock at $126, and I think that would be the beautiful time to add this position. But right now we did get that sell-off, creating a 52-week low. But Chipotle here, I think we might be adding if it cracks under 35. That would just be a beautiful position to add to our portfolio. So that is what I have for you guys, all the news. And then look here, right? We have more earnings. It is earnings season. So, all right, Thursday, tomorrow, before the open, look at Eli Lilly, big name to watch, right, with the fat shots. Sympathy play, Novo Nordisk, okay? Also check out Roblox. That has been running up huge, big name. Then after the close, we have Amazon, Apple, Coinbase, okay? Biggest earnings coming out tomorrow, big names, Apple, Amazon. And then Friday before the open, look, we have ExxonMobil, Chevron, so you get some oil energy plays, Abivai Healthcare. So those are the big names. Stay locked in, guys. Look, we have lots of opportunity right now, right? The market's moving with the Fed cuts, and it's earnings season. We have long-term position opportunity in Chipotle, and we have opportunity in Constellation Brands, guys. So stay locked in, make good trades. You always get the long-term portfolio, right? Let me know what you're adding. Let me know what you guys are seeing out there. But that's everything I have for you guys. So